The Bank of England has cut interest rates to 4%, but only after voting twice for the first time in history. The reduction comes despite a predicted sharp rise in inflation because of rising food prices, but after a recent fall in wage inflation and reduced uncertainty over the impact of President Trump's tariffs. Our political correspondent Shihab Khan has the details.
Lioncroft Wholesale is one of the biggest wholesalers in the country. They sell food and drinks products to thousands of businesses across the Midlands. But Jason Warrer, the CEO, has concerns, and he says an interest rate cut would help.
Sales have been challenging over the last year to 18 months. The economy seems to be shrinking, and our concerns are that when sales start getting tighter in the food industry, there are fundamental problems. I think it's important that they cut interest rates to help stimulate the economy. Low interest rates would help business because people would be more confident to invest. It's more cost effective to invest.
Good news for Jason today because the Bank of England has announced a cut to interest rates, taking its base rate from 4.25% to 4%. The rate was at 5% in August of 2024. Since then, we've had 5 cuts in a year, taking the figure to the lowest for more than 2 years. For homeowners on variable or tracker mortgages, this could mean lower monthly payments, but for savers, it may also mean smaller returns. Today, the Chancellor, who is in Wales, seemed pleased with the news.
I welcome the fact that interest rates have come down today. That's good news for homeowners, good news for businesses. And interest rates have now come down 5 times since Labour came to office, in part because of the stability that we've managed to return to the economy.
But it wasn't an easy call. Inflation is high and expected to rise. And today's decision took 2 votes from the Bank of England's 9-member Monetary Policy Committee, something that's never happened before. And the Governor of the Bank of England stressed a cautious approach would continue.
Based on the outlook for inflation, a gradual and careful approach to the further withdrawal of monetary policy restraint remains appropriate.
It is a complex picture, especially around inflation and economic growth, which is slow, and balancing that remains the challenge.